Hi, and welcome to a new episode of The Value Creators. Today's guest will be Eckart Vogler, Managing Director of Investindustrial, and he's also the Head of Funds and Investment Finance. Hi Eckart, and welcome.
Hi Stefan, and hi everybody. Thanks for inviting me.
A pleasure to have you. So could you give us a quick snapshot of Investindustrial?
Yes, with pleasure. So Investindustrial was founded in 1990 out of an industrial group and currently has approximately 12 billion of raised fund capital. Investindustrial is focusing primarily on investing in Southern Europe, Italy and Spain into medium-sized companies that are leaders in their field. And we've chosen Luxembourg as our main fund platform. At the moment, Investindustrial has a team of approximately 170 employees covering 21 nationalities based in Luxembourg, Switzerland, Spain, United Kingdom, United States, France and China.
Which are your preferred sectors?
Well, all the investment sectors are run by investment teams that are specialized in certain industries and sectors. Next to that, we've got a specialized sustainability team, which covers the ESG footprint of the group, but also the footprint of all the investee companies. And the four, let's say, main sectors that we focus on are consumer and leisure, healthcare and services, industrial manufacturing and technology.
And what about Investindustrial in Luxembourg?
Well, the group is present here already for several decades and at one point in time was even listed at the Luxembourg Stock Exchange. Historically, Investindustrial Luxembourg presence has been focusing on corporate governance and management of the process of the investment process into the target companies. Then, after 2014 and the introduction of the AIFMD, we incorporated an AIFM, which since then provides integrated fund management together with structuring and operation services for the group. The team currently consists of 21 employees. They're specialists in, well, operations, accounting and services, finance, structuring, legal, compliance, risk. So we cover the full spectrum for an AIFM. And we expect to hire more people in the very near future.
What are your expectations before investing into a new business?
Well, I'd like to mention three main pillars here. First of all, we want to achieve good returns for our investors with the aim, obviously, or within the firm values. Second, we want to pursue a sustainable industrial-driven strategy to build better companies for the long term. And last not least, we work relentlessly towards leaving no trace environmentally, whilst leaving positive marks socially.
So, Eckart, how does Investindustrial concretely create value and how do you measure it?
Well, Investindustrial takes an entrepreneurial, industrially driven approach. And, well, how do we create value for the funds? It may be via regional or product diversification or consolidation. In addition, we focus on operational efficiencies with a special focus on ESG matters. And in addition also we team up with founders and entrepreneurs, managers to pursue these strategies. And this has led to a track record of successful projects with international build-ups as well as standalone growth. And we call it the build-up strategy or a platform deal, whereby we start with one company and then we add new companies to this platform.
Could you illustrate your value creation process via different business cases?
Yes, of course. So, first example I have is a company called Neolit. Neolit is based in Spain and operates in the sector of industrial manufacturing. Neolit was founded in 2009 in the heartland of the ceramical heartland of Spain in Castellón, and was founded by an entrepreneurial family which has contributed to its growth in the past decades. And they produce from 100% natural raw materials large design sintered surfaces of a large size, which can be used in bathrooms, kitchen floors, furniture, and especially main focus is their high-end kitchen. And they are now present in or have sales in more than 100 countries and employ a team of more than 650 professionals.
And how did you find Neolit, and what did you like about this firm?
The sourcing of this deal was internal. So Neolit founders wanted to sell, and Investindustrial partners were already in dialogue with them for many, many years. And this helped then getting exclusivity on the deal before a full public auction process was launched. When we were looking into Neolit, we found an asset with strong growth. We saw a market whereby large design sintered surfaces were replacing traditional materials. And we found a, let's say, liquid asset with multiple exit options.
What was the value creation plan for Neolit?
Well, we wanted to pursue an international expansion with a focus on US and China. We wanted to leverage on the experience of Investindustrial in the design and furnishing industry. And we wanted to strengthen the governance structure and the management team.
Which ESG measures did you take during this value creation process?
Yeah, indeed, the question for ESG and the ESG measures which we took for Neolit is kind of like a blueprint for other investment projects that Investindustrial pursues. Here, after the investment, the Neolit management team, with the support of the Investindustrial sustainability team, developed a dedicated sustainability strategy. And they also agreed ESG targets for Neolit. And then the management committed to link even their bonuses to the achievement of the ESG targets. And then in less than 2 years, Neolit achieved a best-in-class governance. They became carbon neutral in 2019 already and remain carbon neutral since then. And this was by taking 3 main measures. One was energy efficiency measures. Second was just sourcing 100% renewable energy. And third was compensation of remaining, let's say, and offsetting of remaining emissions. And they also published their first individual sustainability report in 2020. And all of these, let's say, focused activities led to the fact that they received a gold rating by EcoVadis in 2022. And whilst we cannot, let's say, quantify the effect on the exit valuation that the ESG measures that we took had, we believe they had an influence nevertheless.
Any other value creation actions you took for this company?
Yes, indeed. So in accordance with the plan, we started the sales growth, especially with a focus on the US and China. We also increased marketing spending significantly with the opening of 18 new showrooms. And we took another focus on R&D. So the R&D team was grown to 17 employees with a focus to develop new designs on a regular basis and also recycling strategies. And last not least, we invested roughly 160 million into the production plant to modernize it and to accommodate the growth.
Eckart, would you like to share a second example with our audience today?
Yes, so a second company I would like to present is LifeBrain. So LifeBrain is based in Italy and operates in the sector healthcare and services. LifeBrain was founded in 2013 by two individuals and provides medical testing services. So it's a laboratory for medical testing.
Eckart, could you also tell us how you sourced LifeBrain and the rationale behind to invest into that firm?
Yes, the sourcing of LifeBrain was also internal. The LifeBrain founders were faced with a very fragmented shareholder structure, and they wanted to pursue, let's say, a second growth strategy for which they looked for a decent partner. And obviously with our track record of business in Italy and being one of the main PE houses for investing in Italy, we were a natural partner. And when we looked into LifeBrain, we found an asset with a very strong cash flow generation. We saw the opportunity here again to partner with the managers and founders. We saw an asset with a strong growth potential that we could develop further into a new level.
Could you also elaborate a little bit more on the value creation action plan that you had designed for LifeBrain?
Mm-hmm. So, for LifeBrain, we indeed wanted to pursue the buy and build strategy, so to expand the business further. We wanted to diversify the product offering, the clientele, but also diversify into the segment of food and environmental testing. And then obviously in the process we also wanted to pursue and look for synergies and economies of scale.
And could you also tell us how LifeBrain evolved with such an ambitious action plan?
Well, during Investindustrial's ownership, LifeBrain really went through a transformational journey, and sales and EBITDA were growing threefold. And this was achieved through the execution of the buy and build strategy, on the one hand, with the acquisition of 66 companies, adding more than 120 locations and increasing their presence in almost all Italian regions. Second pillar, as mentioned, as per the plan, was the diversification into the food and environmental testing. This happened through the acquisition of a specialized laboratory and the execution of a parallel built-up plan with the acquisition of 38 companies in less than 3 years, and also reaching a nationwide presence in Italy. And throughout all the acquisition processes, which happened to a large extent during the pandemic, there was no slowdown of the activities. And then the synergies that were reached were obviously with regard to materials that could be bought at larger volumes, and therefore LifeBrain could negotiate better prices, and also through internalizing certain administrative function and centralizing things like energy, IT, and so on.
Thanks a lot, Eckart, for sharing your insights and those very concrete and great examples. It was really a pleasure to host you for a new episode of The Value Creators. We say thank you and see you very soon. Bye-bye.
Bye-bye.